What's going on, dividend chasers? It's the Dividend Bloodhound here with another investing episode. Today's episode we're talking about some of the 3 best stocks that you can buy if Joe Biden becomes president of the United States in just a couple of days in the run up to the US election. Based on that result, and this is something that you really might want to consider because the polls are pointing that there might be a victory his way, despite the fact that we know last time Trump was lagging behind and then miraculously won. This is something to pay attention to because Joe Biden might just win this one. If this video sounds like something you'd be interested in, then do please stick around after the intro. Consider liking this video as well if it brings you some value, and subscribing to my channel as well. That'd be absolutely fantastic. See you on the flip side of the intro. Hey again guys, welcome into the video. So this is a Joe Biden win of the president or becomes president situation. Now you can have a look into these stocks. Now we know that Democrats look favourably on greener energy, healthcare and infrastructure side of things. So I'm going to go into a few stocks in those sectors. But one thing worth mentioning is that Joe Biden and his administration have announced that they plan on capital gains tax increases, which could cause a bit of a sell-off in the market. I'm just putting that out there now because we don't know whether they'll actually follow through with that at the moment, but it's certainly a policy that they are considering for the administration. So if he wins, that could trigger a sell-off in the market as investors exit, just to see just how much that tax might affect them in the future. Anyway, I digress a little bit. Let's get back into the video. So as I already mentioned, healthcare sectors, green energy companies, infrastructure all stand to do particularly well under a Democrat and Joe Biden administration. Now I could have gone into many companies, to be fair, to get involved in this analysis for this video, but I've picked just 3 just so for ease of use for you guys. And the obvious green energy company is Tesla. I'm going to park that one because everybody covers Tesla. So our first stock is actually going to be another sort of known one, and that is Workhorse. So Workhorse is a young-ish company. It's still establishing its product base at the moment. It's recently looking to get hold of a US Postal Service contract to replace the whole amount of vehicles that the US Postal Service has, so it can take advantage of that situation obviously and generate significant revenue from that. This is a high potential company, but obviously with that comes a little bit of risk. So if you're looking for a more stable green energy company, then definitely look into the likes of Tesla or green energy ETFs or green energy companies that are out there. I'm just going with this one purely based on my own thoughts at this time. Lots of potential revenue growth in the future for this company. It's just at the stage of getting contracts placed, so investors are eagerly watching as customers come in and order up to hundreds up to thousands of vehicles from this company in the future, and based on that, that's where the share price is getting its investor sentiment increase at the moment. Over the long term, when we start getting proper quarterly results, that is when the share price will start to jump even more, hopefully based on increases to revenue year on year and quarter by quarter. Let's have a quick look at the app and look at what some of the information is on there. It's not as well filled as usual because this is a younger company on Trading 212. Let's have a look anyway and I'll catch you there. Hey again guys, welcome into the app. So here we are looking at Workhorse, ticker WKHS. Current share price is $16.59 a share. Peaked in September when it was peak hype about the US Postal Service contract, etc., at $30 a share, and then has since declined back down to almost where it was before in August at $16. The company provides numerous commercial vehicle options, not just US Postal Service vans. They produce multiple vehicles that should be able to use for different tasks required by potential customers, and even has an unmanned aerial system for deliveries as well. So as I mentioned, the company is still in its early days. It has a market cap of 2.1 billion, a revenue of 376 at the moment. Obviously that's quite low because of the early days of this company. An EPS of minus 0.58, but basically you're trading this and buying this at the moment on investor sentiment and future revenue potential. As we can see there, the net income is down 37 million at the moment as they're trying to get their product out there. And their debt to assets ratio is also rather high, of course. If we hop on over to the growth metrics, I don't think there'll be a great deal here to see because everything is still growing. 3-year revenue growth 16%, 5-year revenue growth down at 61%. Just too early on in this company's life for any sort of proper metric measuring at the moment. Purely being traded on investor sentiment, and a Biden presidency would do wonders for this share price, I believe. That being said, I'll wrap it up there and I'll see you back in the real world. See you there. Hey again guys, welcome back to the real world. So that was Workhorse stock there. A little bit of a curveball because a lot of people would go for a green ETF, green energy company, or Tesla in that situation. I just tried to be a little bit different. Our next company is from the healthcare sector. Now the healthcare sector would, you could argue, do well anyway under any presidency because we all need to be kept healthy at the end of the day. It's as simple as that. But with the likes of the Democrats prioritising healthcare, and we have the likes of Obamacare, this isn't a political persuasion at all. I'm not arguing for or against the repealing of Obamacare or whether it's good or bad or whatever. All I'm saying is that it attracts a lot of money and healthcare companies tend to do better from these contracts. United Health Group is just such a healthcare company. It has numerous sectors within it as part of the group that it's itself, and it stands to do particularly well if there is a boost to government spending on healthcare that could help Americans that can't usually afford health insurance out in the slightly longer term. This company will benefit from government contracts to provide or help provide this care. United Health Group is up 10% year to date so far and has dividend growth of the last 11 consecutive years. A dividend yield of 1.54 and a compound annual growth rate of over 10 years of 63.54%, which is absolutely enormous based on your return there. That is worth looking at for any dividend portfolio in my opinion. Let's have a look at this company in a little bit more detail. Let's hop on into the app now. I will see you there. Hey again guys, welcome to the next part of this video. This is United Health Group, ticker UNH, and their current share price is $312 a share, trading at near record highs to be fair based on the security that this company provides. Record high of $330. If you managed to buy in mid-pandemic when it crashed down here at $205 a share or $196 even, then kudos to you. So the company has a market cap of 306 billion, a PE ratio of 22.53, revenue of 242.16 billion, earnings per share of 14.33 and a dividend yield of 1.55%. Has a net income of 13.84 billion, which is a huge profit to be making, and a lowish debt to assets ratio of 66%, nothing of major concern there. If we hop on over to the growth metrics here, we can see that 3-year and 5-year revenue growth is 13 and 9% respectively, pretty healthy. EPS growth over 3 and 5 year is not only double digits but 20 and 25%, which is great in terms of a company that's so mature, only getting more efficient. A 5-year compound annual growth rate of 13%, in line with what I said about the 10-year compound annual growth rate. And then 3-year dividend growth of 20.35%, which is a great return on your dividend there. I know it starts particularly low at 1.5%, but growing 20% over 3 years is pretty good going by anybody's book. I'm going to wrap things up there and I'll see you back in the real world. Hey again guys, welcome back to the real world. So that was United Health Group. They're a big healthcare sector company. And now we're going to move on to another healthcare sector company, which is Afroya. I can't even say it. Afroya, which is a medical, or part of its products are medical marijuana and obviously normal marijuana, of course, because you can't really produce one without the other. If that was ever to get legalized, and it would be a Biden and Democratic administration that would be looking into that. I know some of that is delegated through the states as well, for individual governors and states to come up with their own rules on. So I'm not going to get too involved in that politically, but the potential revenue growth and the potential growth in the use of this product, if enhanced across the whole of the United States and more, is a really big thing to consider, and is exactly why this company is doing so well at the moment. It is down currently year to date, but that came on the back of a serious spike that was in its share price at the time, but then disappointing earnings brought the share price back down again to earth. Over the longer term, this company is up 400% in 5 years, and with the use of medical marijuana and normal marijuana becoming ever more prevalent, then this company only stands to grow its revenue further, and then of course that means profit and therefore share price increase as well. And over the 4 years or potentially 8 years of a Biden administration, this company could be given that little helping hand that it needs to create even more revenue. I'm actually an investor with Aphria myself, because I genuinely believe in the long-term growth of the use of medical marijuana and the potential legalization as such. I'm not saying politically that I believe in that that's what should happen. I just know as an investor I can take advantage of the serious growth that could come if that happens countrywide. Let's get into the app. Let's have a look at the fundamentals of Aphria. Catch you in there. Hey again guys, welcome back into the app. So here we are checking out Aphria, or ticker symbol APHA. Current share price of $4.50. Back on the 12th of October, it peaked at $6.37 before, as I mentioned, disappointing earnings. But this company has still experienced pretty massive growth since being practically a penny stock back in December 2015, going back that far. As you can see, there is my small investment in the company as well. It has a market cap of 1.83 billion, a revenue of 543 million at the moment, EPS of minus 0.44, no dividend to report at the moment. Revenue is increasing massively, as you can see by that chart. The company is still making a small loss at the moment of 84 million. A minus profit margin of 15.58%. The key thing to look at is here, this massive revenue growth, a low debt to assets ratio of 27.4%, and this company treats its investors particularly well. Now if we hop on over to the growth metrics, we have 3-year revenue growth of 296%, 5-year revenue growth of 198%, which is absolutely awesome, absolutely insane. Compound annual growth rate isn't there yet over 5 years because the company is just so young. The key thing to take away from this is the revenue growth here, which is absolutely enormous. That being said, I'll wrap up there and I'll see you back in the real world. Hey again guys, welcome back to the real world. So that was our last company there, Aphria. I genuinely hope that you've enjoyed the video today and these 3 stocks actually bring you some value and you can have a look into them yourselves. The long-term approach is best towards investing, so take a presidency term of 4 years. Genuinely, you want to be investing for that period of time or longer, and I would massively expect to see that if you bought in these companies just as the presidential candidates change over, by the next election, most of these positions, if not all of them, will be up a decent amount. If you have enjoyed this video, it'd be great if you could tick the like button and subscribe to my channel as well. And it'll be great to see you in another investing episode. Catch you there.